Okay, welcome to the community calls, well stacked community calls. I was just explaining to Cecilia about the Arbitrum move from Polygon. A lot of you already knew that happened, but Cecilia hasn't been on the community for a while, so I was explaining what we did next. So basically, we're starting to move people one by one to the Arbitrum. Basically, you have to bridge the money. You basically close the wallet, we bridge the money over, then we open up the wallet again at the same level you had. Because we're able to borrow the money to bring back the money you repaid. And next thing we saw was one thing we learned. So the app has been up for 2+ years. So one thing we learned was it's like a gym membership, right? People who show up every month to the gym, they end up in good shape. People who show up to the gym every now and then, they don't end up in great as good a shape. So what we realized is most people planned on being consistent when they started stacking, but they weren't for whatever reasons. Of course, the bad economy, there's a bunch of different reasons. It's not easy. It wasn't easy back then. We made it easier. So what we realized is, okay, we need to be able to do other options if people can't be consistent. So here are some of the options that we are building, and I would love feedback from the community. The first thing is one of the big problems was if you bring in money once and you don't bring in money again, the market goes up and down, up and down, up and down. And what ends up happening is your loan interest slowly grows, but you're not taking advantage of the volatility that Bitcoin and Ethereum have been doing. So if it goes up, like this just happened a few months ago, it went up to almost 110,000, then it came back down to 70 something thousand. So the issue was we had people that were they were very up when it was 110. Then when it came down to 70, we had to protect them. But if we could have took more advantage when it was up by either selling some of their coins when it was up to protect that gain, because what we see it as is you grew your net worth, but you didn't take any profits because then the prices fell and we lost those profits. So we said, okay, we're gonna do three things. These are the three options, and I would love to hear from everybody on the call what they think is best. First option is when the prices go up, we are going to start selling to protect those gains, right? That's one option. And then we'll buy back in as the prices fall. What that will do is take advantage of the volatility, which right now, most people who are not consistent are not taking advantage of the volatility. Second is when prices go up, instead of selling, we'll take some of the dollars you have to still invest and repay the loan. Because what that means is the prices grew and you still have money to invest, but instead of investing, you might want to repay that loan because, like I said, the loan interest is going to keep growing even if the prices fall. So if you've made money, it makes sense to pay off the loan. The third option is do a little bit of both, right? So the idea is as the prices are growing, we would choose between how much percent do you want to keep in cash to buy back in, and how much percent do you want to repay the loan with. So right now we're almost done coding that. And we've been testing it on internal wallets and it's worked. It's been working. So as the prices grow, we've been pushing up the health score protection. So when the prices fall, we protect that gain. And I know I just said a lot of things. So any questions around anything I just said?
I
Paco, what's
think
up? Jason, what's up? Go ahead.
I think that makes sense, especially, I kind of been MIA for a while. So I bet I lost a lot on the volatility aspect. So if it's kind of like an automated process that you are setting up, that could benefit all of us. I like the third option, I guess. I don't know if it'd be kind of like a case by case where you could say, okay, like there's a lot of, the loan has been higher. Like, do we get the option of saying, you know what, I want to pay off the loan, and then the next time there's another increase, we'll use that to take gains on the profit? Or would it kind of be like a 50-50 automation?
So that's a good question. I hadn't really thought of that. The way we thought about it was you either take the profits and don't pay any loan. You take the profit. We don't, instead of taking the profit, you pay the loan with the profit. I'll give you an example in dollars. So let's say you put in $1,000 and borrowed 500, just to make the math easy. And now you have a $500 loan against $1,000 of collateral. And now the volatility happens and it's a good volatility. Now you have 1,500 of collateral with a $500 loan. That means you made 500. So what we would do is with option one, we would turn that 500 back into USDC and let it dollar cost average back in because as fast as it goes up, it usually comes back down. So we'll buy back in as the prices are going down, and that should grow your net worth over time. Second option is, let's say that same 500 gain happens, we'll take that 500 and pay off $500 of your loan, and now you have no loan because well a little bit more because the interest probably grew a little bit, but you have $500 less loan, you have 1,000 of collateral, and now your 1,000 you actually made money and you grew your portfolio using borrowed money. The third option, which is what you said, is you would basically be able to say I will do 50-50 or something like that, just to make the math easy. So now when the 500 happens, you take 250, you turn it back into USDC, and you take the other 250 and you repay the loan. So now you have 1250 in collateral that's going to read dollar cost average in and a $250 loan. And now you've grown your net worth and you took advantage of the volatility, which what I see is most users that are consistent, their net worth is growing really fast. But being consistent is not easy. So we put two things in place to make consistency easier. One is we have our own ACH now where you can just ACH from your bank straight to your wallet, automatically set by your bank. So it's not like we pull money out of your wallet of your bank account. You set it like a bill. You say, okay, every month I'm willing to put in $100 on the first, and it will ACH $100 to your wallet, and then Stack will pull that in and do whatever you did the last time. So that's one way we're helping people be more consistent. Second is we added an email that will let you know what's going on with your wallet. So for instance, we had people up literally hundreds of thousands of dollars, but they didn't come back and look. So when they did come back and look, the volatility was down because they came back to look when the prices were down, not when they were up. So part of me is like, okay, I just need a way of contacting people because this is a decentralized app. There's no email, So we added that, and now you can set that and put whatever email address you want to be reached out to, and then we basically are going to send you updates on your net worth growth, your last time deposit, um, any updates like I'm talking about now that I wasn't able to tell the hundreds of people using the app until we got on like either one-on-ones like I got to do with Jason and a few others, and then the community call as well. So yeah, I guess right now the big challenge I think is moving all these people to the other because we can't automatically do it because it's controlled by every wallet. So we need each person to move their wallet, and we're walking them through it on Zoom calls. So if you have time, set that up. I'll put the link here.
Yeah, yeah, dude. I
Um,
think I think it's a. Can you hear me?
I can hear you. Yep.
Hey, what up, Mike? This is O.
Yeah, what up?
Yeah, dude. When what you're asking for people is kind of like their personal preference, right? Like and their risk tolerance. And so, I relate what you're doing to kind of like the classic dividend payouts from stocks, right? So, for instance, on like E-Trade, if I have dividends, it gives me that option. I can just click that says reinvest my dividends into the same position. So, say Apple pays me dollars, it says automatically reinvest back into Apple and buy more shares. So that's what my brother does. That's not what I do.
What do you do? You take an independent?
So here's no no. So here's what I do. So I think that's where it comes into like personal preference. So like I'm involved with my portfolios. I don't manage a lot of assets. I kind of have like 12 and under usually. I like to see where the money is, and I like to see if there's anything else that can grow faster. So I'll see that chunk of money sitting there, the cash, and if something that catches my eye or has I've been watching for a couple of months, then I take that and I invest into like a new asset. And that
Mm,
has done well for me in the last 2 years, right? Something has grown, say, I'm just using Apple because that's like a good example. I've had two other assets that has grown exponentially faster than Apple and has gave me better returns if I would have just reinvested those dividends back into Apple. Now that I have a larger cash pile, I can buy actually more shares of Apple than I did if I just reinvested those dividend monies. So with what you're saying is, I think we're in a riskier asset when we're dealing with the digital assets like Ethereum and Bitcoin.
More volatile.
And I think automatically would be really beneficial for people because I'm guilty of it too. We can't keep our eyes on everything every day. The things move so fast that we can get caught in a position that we don't want to be caught in. So I think your 50-50 is really nice that, hey, when you're up 500% or so whatever percentage that is, we're gonna cash out a little bit, maybe repay your loan. So if it does come down, you're at least not affected by that crash. What I do is I'm on a similar platform. You know this. I'm on Aave.
Hmm.
What I do is I over collateralize myself. So what my loan is, I make sure that I have a shit ton of like assets there. So even if it comes back down, we're at 104 today.
What
Even if it
health
drops
score do
back
you
down
stay at? What health score do you try to stay above?
say it again.
Which
I try
what
to stay,
health?
I try to stay above 1.3, 1.35.
Okay.
I've dropped down to 1.2, 1.10. But what I do is now I keep about I don't know, like 3 grand, $3,000 in USDC as like a baseline, knowing that my where my score was at 77K. So I don't bank on the 104K. I bank at the worst case scenario. That's the way I see things. So my loan is never more than 50% of 77K, you know?
Got it. Got it.
Because we can go, we're at 104 today, but you and I, we've been in this space where you're like, oh, well, there's always a 30% dip over the summer in September, possibly October. Then you got to wait for like that fall pickup again when everyone's back in and everyone's making their moves. So I think what you're saying is correct. Like have a nice USDC, a stablecoin position that protects that loan. So even if it starts to crash, that stable position still has you protected collaterally because it's not moving. That 3,000 will always protect me at a certain point. And now I like the
And
idea of like,
you
hey, if I
keep that
can
in collateral, or you keep that outside of the wallet?
say it again.
You keep that stable coin stash in collateral, or you keep it
Yes,
outside? Okay.
yes. I keep all that in Aave. I don't keep it in my wallet. Um, your idea that the hard part when profits are when the asset is going up, we all get a little greedy, right? We're all like, oh shit, it's gonna go to 105, oh, it's gonna go to 110, I'm not selling.
Uh-huh.
But then you get suckered in and now you went from 112 to 104 in a week's time. You're like, oh man, I could have sold at 112. So I think if you could figure out a way to automate it where we're up, say like at 5% in say a week's time or 2 weeks time, yo, tell people to cash out, 3%.
So that's what we're automating. We already figured it out.
That
Basically,
helps
there's two ways.
because, and then wait, and then give people that option because again, everyone has that risk tolerance, right? Some people don't want to repay that loan. I'm in that camp right now. I don't want
Me
to repay
too.
my loan
Me
just yet.
too.
Yeah, yeah, yeah. What I want to do is I want to go on the way down. I want to DCA on the way back down, so then I can get my asset and keep building that asset. So I think you have those two camps, and I don't know how you would reach out to your people to be like, where do you want to do? What do you want to do? Option A, option B, or present it on the home screen every time I log in. Like, hey, here's our new setup. Please choose.
Yeah,
This is
yeah, yeah, yeah.
or
100%.
force them, or force them. That's the other thing.
Oh yeah, that's what it's gonna be. Because one of the big challenges I had was I got people of all walks of life. People
Right,
filthy rich and people really trying to come up using stats, right?
right.
And what I see is there's not much difference in those people.
No,
It
there isn't.
really is it really is a luck game in this world.
Right.
So at the end of the day, part of what I've realized is you just mentioned it, Omar, which is how much of your net worth are you willing to risk? Right. So in that scenario, you just said, right, give people the option. Yeah. So in that scenario, you just said, you basically in your mind said, I'm willing to let the volatility do a certain amount before I start selling to protect it. What
Hmm.
we see is people don't know that amount, right? So
Right.
partly it's like nobody wants to lose any money, right? It's like why am I
No.
gonna lower my net worth at all? But
Right.
if what we were seeing, because this is what we were doing, technically, as the health scores were growing, we were pushing up the health score protection. So let's say you started out today, Omar, and your wallet was a 1.3, but Bitcoin and Ethereum go crazy and you're at a 1.4.
Hmm.
So what we do is we say, okay, now we're going to protect Omar's wallet at 1.39. So now if the prices start falling, we take that profit. But if the prices keep going up, we don't take that profit.
Hmm.
But the
Yeah, I
issue
want to
there,
I want to jump in a little bit with you guys with Omar because Omar is such a teacher every time he opens his mouth, I learn something new, and at least it shakes my mind up a little bit. Um, but Peter Diamandis' uh, moonshot this week, I think, was the one that I have in front of my computer right now. And one of the things that um, Miguel talks about is being able to have your feet on the ground to do the kinds of things we're talking about right now, but also in terms of educating folk, um, making sure that they, as much as possible, we get a big picture of what the crypto environment looks like. So, for instance, Peter showed that the crypto wild market size 2023 to 2033, 10 years from now. So, right now, 2023 was 10.28 billion. 2024 was 12.83 billion dollars. And then you go 10 years out to 2033 and it's 94.45 billion. So the growth of that market is incredible. Um, and then he writes, I am all in on BTC. Bitcoin smashed an all-time high record of 111K last week. And then he puts down El Salvador's president, Nayib Bukele, revealed the country's record-breaking 132% or 368 million gain over its initial investment in BTC. The trend is clear. BTC is here to stay, and that couldn't be more accurate as companies worldwide are integrating BTC into their treasury strategies. So Omar said a little before that, um, you know, the crypto is more risky than, let's say, buying Apple. And Miguel sort of softly said is more volatile. And I think that difference between risk and volatility is something that it took me quite a bit to understand because my background is finance. That's my degree in college. My career was in banking. So I have a definition of risk, and I put that risk on the same side of Bitcoin. And for me, I've kind of changed my vocabulary to knowing that Bitcoin is a is a volatile system that I had never experienced before. But the trends are that Bitcoin will continue to go up no matter how deep of a dive it takes. Now, Miguel, Omar, and company here, we're talking about how do we take advantage, if at all, of the dips. That's a game that for me, good luck to anybody who wants to play it, and I don't have any. But that game of selling and buying is a dangerous game for me. I don't say for anybody else. I rather get my stuff and sit it out and let Bitcoin take its course of like it did for the El Salvador of 132% gain on investment. Give me a break. Where can you get that? It's a different view of the world. I don't know if I made any sense of what I was saying, but I'm going to land my plane right now.
All right.
I
So
think you
basically,
did.
go ahead. Go
Oh,
ahead.
so yeah, I think you did because when El Salvador was making that purchase, people kind of like laughed at him for doing it and didn't
That's
see the
right.
vision. And I think when he bought it, it was still in the 40,000s. Something like I think it was at 50 and then it dropped down to like 42 and then the following year it hit, down to 20K. And people were like laughing at him, but institutions were keeping an eye on him and gobbling that stuff up. And now obviously he can gloat because his intuition was correct. And so for more current news, you have a institution like MicroStrategy, which is buying Bitcoin every time they get cash in their hand, they're just buying it and buying it. And with an institution like that, he's really gobbling up the supply, more supply than is being minted on a weekly basis. He just bought today another 705 Bitcoin worth some like $2 billion. And he's buying, he's not stopping. Like, so to your point, Francisco, he was buying at 40, he was buying at 60, 70, 80. He's buying at 103. And you
Yeah.
have an institution doing that. Other institutions are seeing his valuation go up. And now there's a lot of copycats that are also stacking Bitcoin. And so by the year, they're saying by the year 2032, the exchanges won't have any Bitcoin to sell. It's all gone. Meaning whatever we have is ours, and then whoever's coming in, you have to pray that people are going to start selling. And I think, unfortunately, we're in New York, and New York is holding us down a little bit because
Yep.
they know the financial savvy that is in New York City. So they don't want to let people know that you can borrow against BTC. They're
Yeah,
making it more difficult. A lot of the exchanges stopped offering WBTC, so you can't
right.
put it onto other
Yeah,
exchanges.
yeah.
Yeah. One of the
So
things that Peter says, Peter says, so where do we go from here?
we go up.
He says
We always
he
go
said
up.
some facts. BTC's market cap stands at 2.2 2.12 trillion, higher than the market cap of Alphabet, Google. For the first time,
Yes.
American holds more Bitcoin than gold, and the experts predict BTC would explode to 200K to 300K within the next cycle.
Yeah.
Now, if that's true, I'm not saying it's true. If that's true, if I had a shitload of money disposable to me, duh,
Yeah.
I mean, what's the
That's right.
problem?
So what Omar is saying is where I'm starting to take how I speak about it. I used to talk about paying your bills and using your bills to stack. And that worked. People really stuck to that. But what you just said and what Omar is saying right now, there's two things I want to remind myself to talk about. One is how much volatility are you willing to stomach? Because what we saw in the past 2 years is prices go up, prices come down. But when we push up the protection and the prices fall, that means we have to sell some of the Bitcoin.
Hmm.
So what we started to get was some customers like, yeah, but you sold my Bitcoin. And part of it was like, yeah, but now your net worth is here. And when the prices fall, you're buying back in. But people really didn't like that. So we're like, okay, that's when we started saying, okay, the only other option then is to repay your loan then, because if when the prices go up, you don't do anything, you're not taking advantage of that pump,
Hmm.
right? And then you come back maybe a year later and the prices are down because the loan keeps growing. So you
Hmm.
need to do something, right? You can't just sit still. So that was where we were like, okay, we have to do that, but we have to ask clients how much volatility are they willing to stomach?
Yeah.
Because if you said, all right, I'm only willing to let my net worth fall 5%, then when it falls 5%, we're going to protect you. But that means we have to sell some Bitcoin or pay back the loan, right? Those are only two options. Some people say, I'm willing to let it fall 50%. So we have to remind people like, okay, you're saying you're willing to let your net worth fall 50%. Because I literally had a client, this guy was up $385,000. He had a shit ton of everything. Prices start falling. And I'm like, sell. You need to sell. You're up 385. Oh, I don't want to get rid of my Bitcoin. It's going to go to 500K. I know it. And I'm like, do you know that? You can't possibly know that. Yes, I know it. By the time he started protecting himself, he was under 100K of net worth. And of course, nobody wants to see 280,000 loss. But if you don't think about it before and have a plan, that was where we started to see, okay, we need to protect people again and make sure they are thinking about that and putting something in place. And like we're saying here, and Cecilia said that's the good way to do it. We're going to say these are your three options. But also, one of the things we also are going to do is if you are consistent, the truth is you don't need any of these three options because we have people that were just consistent and the price is doing what it's doing. But since they're bringing in new money every month, it's taking advantage of those roller coasters. Because when the price falls, they're buying more. And then price goes up, their value goes up, comes back down, they're buying more. So they're taking advantage of volatility because of the consistency. But if you're not, then we have to choose. So
Yeah,
that's
I think
that
I think
those
it's your platform, and I think at the end of the day, to make your platform successful in your eyes is how you should be doing it. And so if you have a client base that's now trusting you with their net worth as you're describing net worth, right? It is kind of like your responsibility to do the best you can and be like, these are our options that we came up with, and either you choose or we choose for you, and that's it, done deal. And what people don't understand is like you, myself, Francisco, I know his name very well. We've been in the space now for 2+ years, 2.5 years, more.
more.
Um, Right. And so we know that it's going up, but it's not a straight line, right? So we gotta, right now, the cycle is between, this is my take on it. We're right in a cycle between 100 and probably 135 max this cycle. I don't think we're hitting 500K end of this year. I don't think we're gonna hit near 200K. We might hit 150 at most. I don't see it unless, again, news gets released where a bunch of other institutions like BlackRock and MicroStrategy have just bought out everything off the exchanges, that would be some kind of black swan event where the price just skyrockets.
Thing I think,
Until then, people need to understand that you're going to go a percentage. You're going to go up 10%. You're going to drop down maybe 12. You might go up another 10%. And I think for you, Miguel, what I'm bringing into your point is like, I think you should find that percentage range of how the coin is moving now and protect people on that range, not the range of 100 to 150K, but whatever that weekly or bi-weekly moving range is to help people to protect people. So if in a 2 week range, if Bitcoin is moving 12 to 15%, that's the range that you got to protect them on. Hey, if you're up 15%, we're gonna do a stop loss when it goes minus 10. So, so like I think that's what you got to figure out the percentage and then figure out that range and help them that way. And that to what CEO said, give them that option. You can either reinvest or you can pay back the loan. That is the only option you should be giving them because they have to take control. I mean, you really can't be babysitting people. But you
yeah,
as the business owner of Stack, you have to have that platform be a really trustworthy platform to attract more people. And then the more people you attract, again, the community grows and then you can get better insight. So
that's the thing. What I really learned is people even knowing the options, and I was telling people, look, the best option is to sell. So there's another guy who was up. His wallet was like 350K. He had like 100K loan, something like that. So prices start falling, and he was saying, "Look, I don't care about anything else. Protect the Bitcoin that I have." So I was like, "But I don't think that's a good idea because right now you're at 350, and as Bitcoin falls, the value of your portfolio and your net worth is going to fall. I think it's better to sell and buy back in when it falls." He was like, "No, I don't want that. I want to repay. I want repay my loan, sell all my ETH, which ETH grew a lot more, right? If you guys watch, ETH grew like 75%. Bitcoin grew 25. So I'm like, but ETH is good. It's looking like it's outperforming. He's like, I don't care. I'm in this for the Bitcoin. So we repay his loan, and it still keep fall. It's falling, falling, falling. So he ends up going from like 350 to 125. He still has Bitcoin, but I'm like, after I was like, don't you think you would rather have 350K right now with Bitcoin at 78 than your full amount of Bitcoin? And he was like, now that I see it, I agree with you. But I couldn't see it in the moment, and you kind of need to protect me from myself. And I was like, but I was trying, but you didn't listen. I can't do it for you because it's your wallet. So
Mhm.
I was like,
But also people need to learn from experience,
It's
right?
an interesting educational piece because
Mm.
that's the one piece that you taught me, Miguel, was that in borrowing, I've always been against borrowing and particularly playing short in the markets because if the markets fall and there's a call, you're doomed. You could go bankrupt in 2 seconds. And you basically were saying, well, that's probably true, but if BTC continues to grow, uh, the growth will outnumber the debt that you have. It was so difficult for me to see that as a possibility of not having this propensity of the stock the 1929 stock market crash. Pay your loans, man. Never be in debt. Never be in debt. Well, debt in this situation is possibly good. I want to ask something of Omar, Miguel, because one of the things that Peter says in his talk, and there's what he said that I don't understand. He says BTC has never been hacked. It has stood the test of time. And here's the thing: he said there will only be 21 million ever issue, unlike gold, which increases in supplies every 2 years by 2,500 to 2,000 tons due to gold mining. On average, only 4 million BTCs are actively traded, or moved every year, representing 19% of the circulating supply of 19.87 million BTC. What does that mean?
So what he means is like 90% of it never moves. Like it's just people having them in their own wallets. There's only a certain amount on exchanges that are allowed to be traded. So that was what Omar was referencing earlier, where over time that number is shrinking. So the way Bitcoin can go to $1 million a coin is not because people bring in $1 million times 21 million. It's because if they're, let's say we get to a point where there's only 1,000 Bitcoin available on chain, on exchanges. And now, Paco, you say, all right, I want to buy it off you, Miguel. And I say, all right, Paco, pay me 150K. You say, okay. Then somebody comes to you and says, I'm willing to buy it for 200 off you. And you say, okay. Now every Bitcoin, all 1,000 of them are worth 200K just because me and you have been buying back and forth off of each other. So what happens is, as that shrinking supply happens, when people are buying in these exchanges, they're going to push up the price kind of artificially, right? Because it's a scarcity thing where it's like now that there's only 1,000 of them, everybody is fighting for a smaller supply, but then they multiply that same number of one by all 22 million or
So
whatever.
what is so it says here, as of 2024, there were approximately 58 million individuals whose net worth exceeds $1 million. If each of these people wanted to own, in quote, some BTC, that means on average they could only purchase 0.069 BTC.
What he's
So,
saying is because there's only a certain amount available, even if you're rich, that doesn't mean you can get one
Right.
because
It's a
there's
I see.
supply.
Oh, so
less.
they couldn't go and gobble up the market if they wanted to.
But they can't. No,
There's
there's
not
two.
enough of them.
Well, there's two factors at play when you say gobble up the market. Right now, say like MicroStrategy is an institution, they're not buying on exchanges
Exchanges.
like Miguel
Yeah,
and
they're
I
not
are
buying
buying or you buying. They're buying what is it called? OTC, something over the
that
counter, some
OTC
shit like that, where they're going
over the
direct
counter.
to miners. So there's back end deals that they're doing because if they bought off the exchanges, they would either crash the market or spike the market, and that would be too much volatility even for any player to get in and out of. So we don't know that. These examples that you're reading about are good examples for people in the market being like, hey, we've got, X amount of millionaires in the United States. Not every millionaire is going to be able to own one whole coin. So the next best bet, they can own a half coin. When that runs out, the best bet, they're going to own a quarter of a coin. So these examples are great, but also the underlying factor that most people are aware of throughout time, and including our past, people like Miguel said, people lock up their BTCs in wallets. They don't move them. Then somehow these wallets get lost. Passcodes get lost. Now these coins are just lost forever. They just can never reappear on any kind of exchange or market because they're just locked away. So the
Holy
actual
shit!
moving supply.
I didn't realize that.
Well, you have a
Whoa!
famous case. Well, you have a famous case in London of the guy who threw out his hard drive in a dumpster by accident. He's been trying to retrieve this hard drive for the last decade or so. They have told him he's not allowed to go and excavate this dumpster. I just read a report, I think last week, that he's going to try and buy the dumpster outright. He's trying to get partners. He's like, I'm going to buy the whole fucking place.
Now
So
it's worth more. The Bitcoin's worth
Did,
more than the
did,
whole
did he
thing.
have
yeah,
some?
it's worth more than a whole bit. Even with
He had
partners,
like 400. He had like $400 million or some shit like
yeah,
that.
some astronomical number of like some five, I think 900 Bitcoin are sitting on a hard drive somewhere. That's a
Holy shit!
that's a crazy amount of, loss if you think about it. That's a massive loss, and that supply might not even go. Michael Saylor is also now saying that when he passes away, he's going to burn his keys. That
Yeah.
means that those Bitcoin are going to be locked into MicroStrategy for in perpetuity.
That MicroStrategy or his personal stash?
I think that's going to be, he's the owner of the keys to MicroStrategy, right? So I think that's going to be all MicroStrategy. He doesn't want to put it back on. He wants to keep,
If his MicroStrategy is crazy, but he technically has a board, right? Can you do that? Like, I don't know if he can
no,
even.
I don't know. I mean, like if he's the only guy who knows this and he decides to burn it, that's on him, right?
So
Crazy.
what is
He's
it? What is
saying,
that? What does that mean that he decided to burn
That
his?
means all those coins he bought, they'll never hit the market again. So they'll always keep the price higher
yeah,
because again, it keeps the
Well,
supply.
but his estate, whatever his estate is, will own that.
Yes.
If he
Yes,
can
I
have
think it's
access to it,
MicroStrategy. MicroStrategy will always own that particular part, those coins. Like that's their coin, like that's their reserve.
the problem is this is where borrowing is so important because the problem is if he says I'm burning that, I don't have nobody has access to it anymore. That means that money's just gonna sit there looking pretty like a piece of
Well,
art.
yeah, why? Well, how are you going to access? How you benefit from that?
He
Doesn't make
does.
any
He's
sense.
basically benefiting the community of Bitcoin
He
by
does. He does. And like Mike, yeah, it keeps the price at a certain point, kind of like Satoshi. Satoshi has 1 million Bitcoin locked away in his wallet. We don't know who that guy is, where that wallet is, but it's locked up, you know? So like that's keeping the price at a certain valuation. I think for MicroStrategy, they become valuable. Their valuation grows as the Bitcoin valuation grows. So they start growing in tandem with the valuation of Bitcoin. It's an interesting
especially
concept, like Mike says. Like I don't know if he has a board, if that changes in the next couple of years, but that keeps his company and him, you know, sitting really pretty for the next decade or so. Because what he's going to do is, like what Mike is saying, and what other institutions are about to do, they're all going to start lending it out. And that might either be paper form where you might not even get to hold a part of this Bitcoin. You might just be on paper, like, hey, we lent you half a Bitcoin on paper, you know, and now you owe us, you
I
know?
think two things are gonna happen that are gonna really explode this whole thing even more that nobody's really talking about. One is a lot more people are going to do what MicroStrategy did, which is buy it and keep it on their treasury, on their books. Because again, think about a business, right? Any business,
Their values, they can loan, they're going to be loaning it out now. Yeah.
and it makes your business valuable, right?
Yeah.
So if you got a business that's doing 100K a year, but you got $1 million of Bitcoin,
Mm-hmm.
you still look more valuable by having
Yep.
that Bitcoin, even if you
Mm-hmm.
bought it at 100K
Yeah.
now, right? So more people, more, I think gas stations, mom and pop shops are going to start doing what he's doing. Second is think about real estate, even business. The biggest, richest people on the planet have all borrowed money to get more real estate, to get more valuation in their businesses, right? Like if I've raised money
You
for
mean when you say borrow, not borrow more money, but borrow against their assets?
no, borrow
Oh,
money. Think
oh,
about
borrow.
this. Think about it like this. If I started today and I wanted to buy my first real estate property, I go to a bank, I got 20% down. They lend me 80% of the value of that property, right?
Right.
And I got to pay them back over 30 years. But I borrowed 80% of the value of that property, but now it's mine and I'm paying it down.
It's very simple. Residential housing.
Yeah, yeah, yeah.
Most people
That's what
think they own their house, but they really don't. The bank holds 90% of the mortgage, so they don't really own a house. And,
until they
and
pay it
even
off.
they don't see it that way because they call it a mortgage. So
100%.
they
So
don't know that they're in debt up to their yin yang.
And
Yeah.
and
Yeah.
look
They
at what
do.
ends up happening to you. You could be in a position where you have equity in your home. You paid it off, but now you're retired and you want to take money out of it, but the bank is like, "Well, you don't have a job anymore, so we're not lending you against the equity you created by paying off this house." I know multiple people this has happened to. So, think about this. Now let's go into the business sector. If I was to raise money for Stack, the that's basically borrowed money because I owe these investors money, right? Once they give me $1 million, it's not like, all right, thanks, I get to buy a private jet. No, I got to take that money and build Stack, but I owe them the million plus, right? So I'm borrowing money to build my business up. So what I think is going to happen is people are going to start borrowing money to buy Bitcoin. So if I could put 10,000 down or 20,000 down and buy a full Bitcoin and pay back that loan as Bitcoin is growing, because again, I bought it for 100K. I put 20 down, but now it's worth 500K. I only got a 100K loan. If it's a million, I only got a 100K loan. That is where I'm kind of moving Stack. When I'm talking about it now, I'm talking about borrow money to buy Bitcoin and Ethereum right now at the current price. Yes, it's going to be volatile, but in 10, 20 years, just like homes, you're gonna wish you bought it when it was 100K, not when it was 500 or a million, right?
Mhm.
And that was the opportunity that past generations had that we didn't, right? When we went to buy houses, they were already much higher than like our
Yeah.
parents and our grandparents.
Mm-hmm.
That I think is what's gonna happen with Bitcoin.
Yeah.
So right now, if you can borrow, which we can, what we know how to do with the Aave of the world, you can borrow. They just switched it because I was actually, it's funny. I was talking to somebody from Aave because they just changed the LTVs. Even on Arbitrum, they changed the E mode.
Hmm.
So I'm talking to them, and what we're doing is we're taking loans from DeFi platforms. They're called flash loans, and that's how we're able to do invest only, where you could put down 10,000 and buy 80,000 worth of Bitcoin because we're taking a flash loan from a company that charges 1%, not even 1%. So again, think about that. You're able to buy an asset that's going to grow faster than real estate. At least that's what we think, not financial advice, right? Um, it's going to grow faster than real estate, and your interest is cheaper, and there's no monthly payment.
Right.
Why
No, I
wouldn't
think
everybody do that?
I I think well again I think it comes down to education participation, you know. I think the everybody's like you said from everyone's familiar with real estate, everybody's familiar with traditional stocks. I think the digital asset space is still quite new. I think we hit one mainstream, you know, news cycle in 2021. We're hitting another mainstream news cycle this year. You know, people
Trying to
predict
become
next.
more credible now because BlackRock and all these people.
Yeah, everybody, yeah, all those ETFs. And that's the thing. So I had those ETFs last year. I had I forgot what it was. Grayscale. I had they had the largest stack at the moment before any BlackRocks get involved. And like that's what I'm saying when you say these lending protocols, these ETFs are garbage, you know, like they don't move with the price of Bitcoin. The only traditional um, stock that moves with Bitcoin is MicroStrategy. That's it. And I sold out of all those ETFs because they just weren't moving. So like that's garbage play, you know, like I'm not a fan of ETFs at all. I made money on it. Yeah, great, cool. But it doesn't, and I've reinvested right into the real asset. So I think in the future, that's what's going to happen. They're gonna have BTC on their balance sheet. They're gonna say, hey, we're gonna lend you a quarter of a BTC for whatever value that is because that's going to be the monetary system as we go forward, I think a lot of banks and people are trying to safely figure out how they'll be able to lend this asset to people so they can start borrowing against it, but it's going to come at a hefty price tag. And so like what you're
Oh,
saying,
I took a Bitcoin course,
okay,
and it was all Bitcoin maximalist, right? So
right,
I'm talking about Ethereum, and I'm like, you know,
I don't care,
Satan, get out of
right,
it.
right.
But so I'm like, okay, so show me where you can borrow from the Bitcoin. All the interest rates were double digits. So I had one of my customers, he had like over 10 Bitcoin and he wanted to borrow. So he's like, Miguel, can you help me? So I was like, all right, I'll help you due diligence of all the options.
Mhm.
He ended up having to pick one that was 15% interest. He had to pay 2% up front and then interest only payments for a year. Then he has to pay back the full amount to get his Bitcoin back. But again, the way it worked was super scary. Like he basically had to, this guy sent like 4 Bitcoin to an address
Hmm.
and they sent him back 200 grand. He did it when Bitcoin was like 100 grand exact.
Hmm.
So he sent 400 worth. They sent him back 200. So also 50% LTV.
Right.
So he's like, but dude, what if they never gave me my Bitcoin back? And I'm like, I know. That's why I'd rather do it with a smart contract than
Same. So I think that's what's going to happen. Those kind of scenarios will happen as this
That's
becomes.
scary. That's scary.
It's very scary. And I think that's where JP Morgan, Goldman Sachs, and these guys are trying to figure out a slightly more safer route. But as we know, these institutions want your money more than anything else. So if you have Bitcoin, they'll probably offer you a nice penny for it. But then they're going to have all these stipulations on how you can get it back, why you can't
one
get
of
it back.
my biggest worries is
So I'm not trying to do that.
historically, Paco used to work in banks. There was a point where people used to store their gold in banks, and then
Hmm.
the country just seized it all, and
Yeah,
they just took it straight out the banks. So I don't think I will ever let a bank hold my Bitcoin.
right.
Second is I don't see BlackRock pumping the price crazy in one shot because then they don't make as much in fees, right? The goal for BlackRock is to continuously let the volatility do its thing so they could charge their clients, their
Hmm.
multi-billion-dollar clients, that management fee every year. So they're
Yes.
not going to just make this thing from one day to the next be non-existent and nobody else can have it because then they fuck themselves.
Yeah,
No,
but
it's true.
Miguel and Omar, just go back a step, just so that I can understand this, which I had never given too much thought to, unfortunately, as banker as I may be, simply because I was looking long term at Bitcoin. Did I just hear you say, by the example of the client that wanted to borrow $100,000, whatever, he had to put up 4 coins, that liquidity in Bitcoin is still not solid, that it doesn't have the liquidity that you are able to put $10 million of Bitcoin and then say tomorrow, I've got to borrow 2 million for my Bitcoin.
No,
That,
no, there
that
is, there is.
doesn't work. It doesn't work as easy as that anymore. Is that what you said?
Bro,
No.
the way he did it was centralized. So he needed to send his money to a company, to send his 4 Bitcoin to a corporation, sign contracts.
Hmm.
Then that corporation had to go out and find investors that were willing to lend him the 200,000
Mm.
off the four.
But why could he do that automatically? You mean
So
it's
the reason is because he bought it as normal Bitcoin. So to bring it into Aave and borrow the way we do, he would have had to convert it, and that would have created a tax basis
so
hike.
he was not in a stack with that Bitcoin.
No, no, this is I just met him and he started stacking with new money, but he also had 10 Bitcoin from years ago. And he's like, all right, I need to start using this. He thought Stack could borrow, and I was
Yeah,
like,
why would
come
I don't
in.
understand why would him converting BTC into a wrap BTC be a taxable event?
That's what it is. That's how it works. If you switch, so I've been on calls with multiple uh accountants for my clients and stuff, and the way it works is if you move the coin from the original place, the blockchain,
Hmm.
or the asset, it's a taxable event up or down. So if you turn Bitcoin into wrap Bitcoin, let's say, check this
But
scenario
it's
out.
usually 1 to 1. You're
Yeah,
not really
but if you
losing
bought
a
it at 20K and now it's 100 and you swap it to wrap Bitcoin, that means you got an 80K gain.
fuck out of here.
Yeah, that's how they treat it. I didn't know. Again, I've been on multiple, and I'm like, fuck, that sucks.
Because I
So
usually do
everybody
one
who
to
bought,
one immediately, so I'm never like, 5 years, I'm not in the game that long, right? But I'm not doing like, oh,
oh,
it's
you do it
70.
right away, right? That's
Yeah,
what I'm saying.
yeah.
Yeah, okay, so you're good. But if you think about it and you bought it like this guy, he must have bought it when it was like maybe 5K or
Hmm.
whatever. Now, if he switches it, he got a 95K
Oh, that's crazy.
Yeah,
times
that's
10.
insane. That's why I
But he's
wanted to
not,
go back to
I
this
guess you're right,
because
because he's not selling, but he's also, yeah, I guess he's, yeah.
So the problem is, this is what I tell people, if you're ever going to want to borrow off your Bitcoin, you almost can't buy it as regular Bitcoin because I've searched the world far and wide. I have not found a way you can borrow off native Bitcoin without converting it to something,
Yeah.
interest being super high and it being somewhat centralized. I found one platform that is built on like the Bitcoin blockchain, but again, it's weird. The tokenomics, the way they give you interest, the interest was like 30% on, they have like a stable coin. It's not USDC, but I don't even know what the state. So it's just so weird over there that literally that's why I took this blockchain class because I was trying to find a decentralized version of this that I could build stack on top of, but there's none yet. And the more I ask, I don't think it's gonna happen. I don't think they're gonna build a DeFi way the same way Aave does. And again, think about it. If Aave could build Aave on Bitcoin, don't you think they would have? You
Yeah.
know, they got trillions of dollars, right? So the idea is if you're ever going to want to borrow off of your Bitcoin, you need to figure out where is going to be the best place to do it. That's one of the reasons why we chose Arbitrum as the next blockchain to do, because Arbitrum is becoming the DeFi blockchain. And if you look it up, search that, it was the first layer two, actual layer two, and it has the most DeFi money in it for like ever, including base and
what
everything.
is the name of it?
Arbitrum.
Arbitrary. Yeah, I've heard that.
Yeah, so
and who owns Arbitrum?
it's decentralized too. So that's another thing. It's a decentralized blockchain.
It's like a market. It's like the stock
Like
market?
Ethereum, it's like Ethereum, right? Ethereum's decentralized because, even though Vitalik can say, "Hey, I want to do this," people still have to vote on it, and the way it works, it's not just him that he could just turn it on and off. So Arbitrum is decentralized. So check this out, Omar, too, which I didn't know this either. Let's say you buy wrap Bitcoin and you send it to Polygon and you leave it there, and in 2 years it's 500K, and now you move it to Arbitrum, taxable event. Because when you move it from Polygon to Arbitrum, it becomes a different asset.
Unless you live in Puerto Rico and you're taking advantage of that, then it's not. Then
But
you
they
get.
trying to cut that off too. Us Puerto Ricans, we
Yeah,
they cutting that
but
off.
we're talking about up to this point, and we're not talking about regular tax. We're talking about capital gains tax,
Mm,
There
which
is
is
this idea. I don't know if it's true. They're saying Trump might get rid of capital gains. Who knows? I'll believe that when I see it.
right.
But the overall is this is information I didn't know either till I got on multiple calls with people's accountants and businesses that are doing it. So there's multiple things. One is you got to pick the blockchain you think you're going to most likely keep the longest. And when I first built this, I really thought Polygon was, remember when we started doing this, Omar, Polygon was the first L2 that was
Yep.
a cheap gas fee.
Hmm.
Arbitrum wasn't even really rocking like that. Aave wasn't on Arbitrum.
Hmm.
So I built it there. Disney was working with them, all these big brands. But then once Aave fell out with them, I had no choice. So I was like, all right, I got to research where's my new home for this. And Arbitrum, based on my research, it was either Arbitrum or Base.
so Stack is in Arbitrum.
We moved it to Arbitrum. Yeah. So now we're moving wallets one
Yeah.
by one to Arbitrum. Yeah.
Miguel and Omar, just maybe great conversation, everything else, but I have a question for you, Miguel, because I have self-interest in this question, like every other question, I guess. You said that Florida was open, right? And by the way, my daughter called me and she said that she had a big conversation with you, and I said that's great. I'm glad. And then she very quietly says, Dad, is this still the safest way for me to put my money? Very quietly, like it scared my heart
No, no. I mean, this is
for for
risky.
for a moment because and then I remember your dad is into stock and everything. I said, Leah, at this moment, my opinion is this is the best way for you to go with Miguel. But I got scared for a second, because she said, Dad, is this the best way to go? And I wanted to say, excuse me, I can give you advice, but this is your fucking decision.
No, but this is where, like, part of what I'm learning now is what I tell people is there's things that are in my control as a creator of a business, and there's things that are not in my control. So, like, for instance, what happened with Polygon, that was one of the first times that it really hit me like something can happen that affects your entire business, and I literally had nothing to do with me.
Hmm.
So I was like, holy shit, that's a scary place to be. But at the same time, what is the other option, right?
Yeah,
The
I
other
understand.
option is
That's
give your money.
understood. Yeah, that's understood. My question to you is, how do I make money for Stack and myself in Florida?
Oh, okay. So now so just so you guys all know, most of our customers in the beginning were in New York. Actually, Paco was in New York. Most of our customers in New York, because I'm in New York. So New York, as you said, Omar, they're blocking a lot of stuff, including borrowing and all this stuff. So what we did is we partnered with a company called Bridge XYZ. They just got bought by Stripe for $1 billion. So huge company. But before we were partnered with them before Stripe bought them. What we do with them is they are an on and off ramp for us. What that means is you can ACH money from your personal bank account or business bank account, and it sends their money through them. They're like a money transmitter. So I don't know how many of you know this, but when you are building a business that moves money, there's all kind of laws, regulations,
Hmm.
anti-money laundering, crazy shit that if you don't have the licenses to do that, you go directly to jail, right?
Hmm.
So to buy those licenses, you got to buy them per state. So
Right.
it's like millions of dollars per year. So of course, Stack is not making millions of dollars. So I found Bridge, and Bridge was like, you can go through us, you pay us a fee every month, which is not nothing, it's pretty high. And all your customers can send ACH money from their bank accounts to their own wallet. You never touch their money, so you don't need any licenses.
Mhm.
So New York, Florida, Alaska, and Louisiana were the only four states that couldn't do it. Recently, Louisiana and Florida opened up. So now, Paco, answering your question, New York, they tell me by Q3, New York should be open, but I'll believe it when I see it. So, Paco, to answer your question, what I'm starting to do now is I'm starting to show people this whole borrow to buy Bitcoin idea. Think about it like a house. The way we're doing it now is we're saying, look, for every $10, you can buy $35 of Bitcoin and Ethereum. For every 100, you can buy 350. So what we're trying to do is getting people to say, okay, if you consistently just it's the same idea as the bill. If they were bringing in 350 and borrowing 100, it would be the same idea. But we're just the hardest part of any business, and a lot of you people in here are business owners, is called message market fit, right? The app does a bunch of different things. You can use it many different ways. But what I'm trying to find is what's the way that I can say it in any mode and people want to do it. So I'm testing this one out. The pay a bill worked, but most people didn't understand it until I explained it for like 3 hours. So that's what I'm trying to
Plus a shitload of videos.
yes. So this, I'm trying to connect to something people understand already, which is real estate. If I told you today, every month you can buy some real estate with $100, most people would be like, all right, I'll do that. But my thought is it's the same thing with Bitcoin, and Bitcoin has much more upside. And that whole idea of trapped equity is not the case here. If
So
you
my situation, Miguel, is very simple. I got an organization of which I sit on the board of at Delray Beach, Florida, and I've only been here a year and a half. But you know me, I jump in. I could jump in anywhere and make money.
Paco plays
So
softball. He's 80.
so
He's
so
80.
Soil and Soul has been around for probably 12, 13, 14 years. It's a not for profit, and they deal with mindfulness. Um, they deal with ecosystems, making ecosystems, and they deal with family circles in which a foundation gives us money so we can pay people $500 a month to participate. Um, and we recently signed a contract with a guy who has an insurance mechanism to make insurance more flexible, more affordable to people who have, let's say, like five, six people to insure for health, which the big companies don't want to do. So we sold our first insurance instrument to a company here in Florida who've been around for 20 years with 5 employees, and they've never given them health insurance. We're going to be making probably like, I'm going to make up a number, like $5 uh, per sale per person when we sell it. So it's very small amount of money. So we'll have to sell a lot of that insurance. But for the first time, this Ford not-for-profit is going to get into the business of profit making through this insurance company, which is followed by Brown and Brown.
Mhm.
I want you to think about how I can bring Stack like Brown and Brown and this insurance instrument into Soil and Soul, where you could give training to that group because we have probably about 400 or 500 people in the Delray Beach that are connected to this platform, to this service, so that we can then begin to then not only that I can make money, but that I can have other people and particularly the organization make money with Stack, and I would have a little army of salespeople. Does that make any sense to you?
100%. And so here's what I've been thinking about a lot. We're making the onboarding process a lot easier. And then the whole ACH thing going back and forth, bringing money in and out makes it so people can be consistent. So what I'm talking about doing now, and I'm trying to figure out the best way to do it, is getting people to try it with $10. So they can see and say, okay, send $10 a month, like a bill, like Netflix, right? People pay Netflix. So if you could put $10 a month and we end up buying $35 of Bitcoin and Ethereum for you every month, then you grow from there as you can, right? If you can go to 100, now you're buying 350. If you get to 1,000, you're buying 3,500, right? So the idea is let people grow based on their level. But what I'm trying to do is figure out a way how to incentivize the referral structure. Because you all know, I'm pretty sure you all know, if you bring somebody in, we give 10% of whatever our fee is to you, lands right in your wallet automatically, right? So what ends up happening though is there's no real reason for me to use a referral code. The only reason right now is that the only way you can use it is with the referral code. So everybody uses one. But when we open the app and anybody can just do it, it means people may not use the referral code unless we create a reason to.
Yeah,
So my
Miguel,
hope is,
unfortunately, the lunch bell rang.
all right, all right. I'll
I
talk.
can't.
I'll reach out. We'll connect. But let me
Let's connect to follow this one up because I think this one has potential.
all right. Well, I'll be in
All right.
touch. All right.
Thank you, guys. Thank you, everybody. Have a
All right.
wonderful week.
All right, have a good one. So my ultimate idea is to figure out how to give, you know how Coinbase used to do it where invite somebody, they get $10, you get $10.
Mhm.
I'm trying to do something like that. The only issue is because this is decentralized, people could game that, right? I could open 25 wallets
Right,
and just take all the money, close all the wallets.
right.
So I need to really figure out how to like close that potential hack. And once I do, basically that's going to be the idea. There'll be some type of referral bonus for the person you refer that makes them want to use the referral code. And then you will make money on every time they use it. You'll make more than they do, actually. So that's the overall idea right now. But yeah, I mean, any questions around anything, not just this, but it's been over an hour, so I know I've had you here for a long time. And thank you for everybody. And quickly, I would love you guys to introduce each other, like because I know you all do interesting things. Can you tell everybody what you do, Omar, and then Cecilia as well?
Yeah, I'm a graphic designer. Worked for myself for a long time. I do branding and identity systems. Also design systems for experiential spaces. Um, Also, like Mike knows, part-time investor since forever. My
Me and Omar
greatest
went to high school together. We know each
Yes, yes, we know each
other
other for a long time.
a
I was
long
just about to say my greatest claim to fame as an investor is when we graduated high school, like in '97 and '98, I opened up my first IRA and I bought Apple at $30 a share. I've
Was
been riding.
you was you in
What?
class when Mr. Cooper told us to buy
That's it. That's
Pixar?
why I did it. Yes, that's why I did it.
Yeah.
The investor came in, he was like, buy a stock where you know what they do. The only thing I knew about was Apple because I had one in my house, in my basement. I bought Apple. My dad was like, that shit's going bankrupt. I was like, well, I
I
own an Apple
kicked
computer.
myself, man. I
Dude,
didn't know you fucking bought that.
I bought that shit at 33 bucks a share back in 1998, right before the
Oh,
iMac hit, the iPhone, all that. I've been riding that shit. I've been riding that shit since then. So when they say is be long in the market, man, that's been paying me dividends since again the late 90s.
That's
My only regret is not buying more back in those days when it was like 65, 78, 80 because I just wasn't a savvy investor and I thought it was going up. I'm like, oh,
and we also have no money when we are in high school.
yeah, yeah, exactly. That too. Like, I only had, a couple of $100, but because my parents were like, what do you want for your birthday? I was like, just open up an IRA account for me and put the money
Man,
there.
that was savvy, dude. You should have told us all you were doing
Yeah,
that.
it's helped, man. So like, with that knowledge, going to Celia and what we talk about here, and I wish Paco would have stayed on because the volatility of this current digital asset class is going to be less because as the price goes up, more people will be less inclined to sell and buy because they can't afford the high prices. People know it's going to go up; they don't want to sell. And also with institutions getting in, it's a curse and what do you call it, a blessing
Yeah,
at the same
yeah.
time because if it wasn't for institutions buying it, we wouldn't be at 112K right now. We'd still be around 40. So,
Also, they took out the risk, right?
yeah, they
Everybody,
took out the risk.
yeah,
So like we won't have those like back in 2021, I think when you and I got in, right? We had like those 30% swings. People before us had 50% swings. Now
and
we're probably
also
gonna get
people still didn't believe in it, even when we started, right?
right.
Now it's like, how do you not believe in it? BlackRock.
Right, right. Because it's too much mainstream news about all these institutions getting in on it. So now we're going to see, we're now what, 15 and 30% swings. In the next 5 years, it's going to just play out like the regular stock market. We're going to have 3 and 5% swings, So it's going to get safer and safer and less risky. And again, like what you said, Mike, we're at a really crucial time where we're able to afford this like our parents afforded houses back in the day. And in when our kids or you have kids, when they have grandkids, or sorry, when they have kids and you have grandkids, that's going to be just unheard of
Mhm.
to buy a whole coin, you know. And again, unless you're coming from Arab money, you're not getting that whole coin. So
Unless you own an AI.
yeah, that too. So that's what I do, man.
Uh,
So at the heart of everything, I'm still a designer. I still do branding and identity systems. I'm still grinding on that front and making my way into the AI space very slowly but surely. It's happening because I've already done 2 jobs using AI and it's
Nice.
saved me a lot of hours, a lot of hours.
Awesome. And Cecilia, can you tell everybody what you do?
Sure, sure. So I came through the group actually through Eric, which is a friend of Miguel.
Right.
You met like, I don't know, a couple of years ago. But so I used to live in New Jersey. My husband is from Alabama. So we moved here to Alabama. It's been 3 years. In 2017, I started running a cleaning company. So I came from the fashion world. So I worked in New York forever. And my claim to fame, like Omar, you got Apple 25, I had Apple 51.
Nice.
Nice,
Just
nice.
because I heard that at that time it was going to go to like, I don't know how much it was. And I was like, ooh, I'm going to get into it. So had no idea. I went to the nearest Bank of America. I went to
Nice.
the Merrill
Wow.
Lynch guy and he goes, do Apple do ADP? Which I'm so glad I did. Just, he gave me other stocks that I still have,
Wow.
But I got into like day trading and I was doing options and Blake
Damn.
was doing futures and stuff. So I'm kind of like in and out because running this business it's been good. I've been doing this in 2017 and we opened up our second location in Alabama. So in
Right.
Huntsville, which is very techy, very people can just book online and it's great. So Blake takes care of that. I still take care of the New Jersey business, cleaning business, and that's how we live. And we live in a cattle farm.
Yeah, that's what I
and
remember. You have a farm, right? You
yeah,
live.
yeah. My husband's family. This is their business forever.
Nice.
So I came in and I bought cow. We bought cows ourselves. So
Oh
I think now we
yeah.
have like 20 cows or so to our name
Wow. Holy
and
That
cow.
growing
is interesting. I
and
didn't
growing.
know
And
you
now
had.
the cows, just like the stock market. Each cow like their value goes up.
Hell yeah.
Right now value is up on the cows. So
Wow.
it's like we try
What
to
they
find
produce every.
ways
Wow,
to.
wow,
Can
We
I
try
can
to
I
find.
ask you a question, Celia? So you
Yeah,
have a
yeah.
legit farm with cows on it?
Yeah, it's legit, man.
So you have a
Legit.
working farm with chickens as well?
My sister-in-law, well, the farm itself is like 200 acres, right? It's been in the family, like Blake's father and his father and his grandfather. So it's been in
Okay.
the family forever.
Oh, so
Now it's like, I'm sorry,
so it's a registered farm, like for real registered
but
farm.
for real, yeah,
Okay,
yeah.
because
So it's
my question is leading to I've have friends who are in upstate New York and they have a large, they have acres of land. They have now grown chickens, some have grown produce on there. So
yeah,
I don't think they're a farm, but they've grown enough of a quantity that they can sell the
it's a
produce,
sell.
and especially the eggs. But the government is cracking down on that. They don't want you selling your fresh eggs to people if you're not, I don't know,
Imagínate.
registered or
Yeah,
something.
trying to keep those egg prices up.
yeah,
Yeah, yeah, exactly. That's
seriously.
what it is.
Well, I
Bro, for real,
have
yeah.
look.
And the
We got
pesticides or
our
whatever else is in there.
our local neighbors, that we get
Hmm.
fresh eggs from.
Yeah.
The cattle, the way the business works is that we raise the cattle and then the father sells them to the market, meaning like kind of like an auto auction, So they're the cattle, the cows or the bulls are being sold in the market where
Mm.
restaurant owners or I don't know other
Yeah,
businesses are
yeah.
buying them. That's how we make the money.
Okay.
So it is, you have to have some sort of like registry. I didn't even like get into the documents with them, but anyway,
Yeah.
you could do that as a business. That's how the family has survived, for a long time. So me coming in as a newcomer, I was telling Blake, my husband, I'm like, well, we need to buy our own cows, Like Blake always had his herd, since he was little. His father gave him all like the siblings, like a number of cows. And then it's up to you whether you want to buy more or not. So I
Hmm.
came in the picture. I'm
This
like,
is
yeah, we're
going.
buying more. So,
That's
so,
super interesting. Oh my God, that's
Yeah.
super interesting.
so it's like, wow, right? You never think that it's we're something that you can make money. Why not? Right. So like, when I met Miguel and we talked about Stacked, I thought it was pretty good because I had money. Like I was like, well, I could. take from the business and invest it, right?
Mhm,
I'm not
mhm.
gonna just leave it in the bank. So, but I've been lazy. My bad, you guys. Not that I've been lazy. I've been lazy with stock. So I got no
No,
freaking
you,
clue
No, man, it's
where
like,
I'm at right
it's hard
now.
when you have a life to live,
yeah,
you
yeah,
can't,
And,
100%.
you know.
but, just kind of, we started Huntsville location like about a year ago. So we had to get that off the ground, and that's kind of automated. It's running itself. So, but now I'm back. I'm like, when I saw like the emails from Miguel, I was like, oh man, I haven't talked to Miguel in forever. So I'm so glad that
I'm
you,
glad you're you're on the community emails because I got a bunch of people that they never joined the community. People brought them in that I never met. So I got hundreds of people who show up on the website and I'm like, somebody tell them we need to move their wallets.
yeah. So I was like, and I had no clue. So, we're setting up we got a call
Yeah,
scheduled
yeah, yeah.
this week.
Awesome,
Yeah.
awesome. Amazing.
So that's where I'm at right now. And, I'm trying, and that's this whole automated thing, Miguel, is such a good idea because I don't want to fall off, but at the same time, I want to know that something is being done,
Yeah,
know?
yeah, 100%, 100%. And so it's there and yeah, whenever you have time, let's set up a call and we'll walk you through moving it and then setting up the ACH if you want to set the order up.
Yeah, yeah, that's good to do it because I still, I believe in it, and it's something like, right now, I mean, I was viciously doing day trading.
Oh, you what?
Yeah, man, I
What kind
was
of
for a
stuff? What kind of
while,
stuff are you
like two
trading?
months.
Omar trades too. So give us some tips. Give us some tips.
Yeah, seriously.
Well, I've been out of the game, you guys. I've been out for like
Oh,
maybe
got
two
it.
months or so, two
Mhm.
months that I haven't been doing it. But man, I was religiously doing it for like a whole month, just nonstop.
And actually,
MSTR.
before I forget, I want to
Mhm.
create another call like this, but just like market stuff. Like to talk
Yeah.
about what you're about to say right now. If you guys are interested, I'm gonna set that
That'd
up.
be so cool. Yeah,
Yeah, it would be
because
cool.
there's actually this community that I found out. It's Stock Pros. And you could find them, stockpros.com. You can find them on Instagram. And one of my clients actually told me about it because, he's a builder, but he goes, hey, I do day trading. I used to work for Wall Street, but I don't do that anymore. I do my own. And I was like, man, put me on. So he told me about the stockpros.com. And it's like $100 like subscription, but oh man, you make $100 in a minute. You know what I'm
Mhm.
saying? So,
Nice.
No,
so
it would be good because I think what Mike is saying in regards to the digital assets about keeping buying and selling, like selling the way up, buying the way down, just to protect your net worth, but that's also day trading at the heart of it. Like
yeah, it's trading.
you're
And if
basically
you're
gonna lose
not,
your hair. You're gonna go bald faster than ever. But I think what I would like to get into, one of my buddies, he started doing options, and like once you own 100 shares of a company, you get verified through E-Trade, and like now you become an options trader, and now he's banking more on the options than just holding the position. So I
oh,
think,
absolutely.
yeah,
Absolutely.
yeah.
Because
So I
that's
think
100 shares.
that's
He lends
something
them out. He
to.
lends his shares out. That's why.
No, no, when you're selling when you buy or sell options, right? You control 100 shares of a stock. So you do a call option if the price goes up, you make that money.
You guys gonna
And
have to teach me
and you
this.
go short when the price goes down. So you
Right.
could make money regardless on no
Right.
matter how the market
I know a
flows.
little
You
bit
still have to
about
get on the
that
hook
world.
if it what?
I know a little bit about that world. You guys are gonna have to teach me that because I want to understand it more,
Mhm.
but I also try to focus on this world. But I know you could do the same thing with
Yeah, you
the
It's
can.
the
But
same
again,
concept, like you're saying, and like what Omar was saying about, how risk averse are you?
Mhm,
Do
mhm,
you
mhm.
want to pay that loan down? Do you want to use that OPM to buy more and invest? It's like, where are you in your risk
Mhm.
tolerance? So you're trading basically is what
Right.
you're doing
I
with
will.
how
Yeah,
you sit.
it is. I will give you both one new company that has come on my radar that benefits everybody in this group. It's called Seal SQ Corp. Their handle is LAES, and what they do is they're doing an anonymous what the fuck is it called? Quantum security.
Apple
They're
Life Digital Solutions?
what is it?
Apple Life Digital Solutions.
No, Seal SQ Corp.
I'm sorry, what was
What's
the
the
ticker?
LAES.
LAES. Okay,
Yeah,
sorry.
they're Nasdaq. They're new. They're right now they're kind of down at $3.29. They have a base at 260, which is probably if they go under 300, I might buy.
Dude, they went up to
word?
$11 at the middle of the year, and they started at 29. No, they started at 26, went low to 29 cents, and then
Yep.
Up to 11, and now they're at 3.
Right, and they've been on fire for the last like 2 months because they're really trying to do against quantum security, and they're
Hmm.
partnering with blockchains that keep us safe, so the quantum computers don't come in and hack like a blockchain, and that's what they're trying to do. So they're
Is
really
this
trying to
one,
do some.
Omar?
Yeah,
This?
there it is. Right.
They
Hmm.
already have options. Okay. Yeah.
Yeah, so they're a nice company. Again, I've been watching them, and I think they're just trying to do good because they're trying to get ahead of the quantum computing and what that means. And so, like, you have a company that's like, hey, we're going to provide security for the blockchains. I mean, like, that's pretty cool since we're all getting into blockchains, you know?
Exactly.
Nice, nice. Yeah. All right. So what I guess we'll do this on the actually I
Do it on
want
the next call.
another time
Yeah,
do
yeah,
these
yeah.
like these trader type calls. So all right,
Yeah.
I'll let you know. I'm gonna try to figure out how to do that maybe at night someday during the week.
Yeah, night
Love
helps.
for you to
Like,
walk us through like what are you because I don't know what you're talking about. So
right.
start from
Well,
there.
you know,
Right.
Mike knows the guy. My other buddy Isaac, he's also a big
Oh
stock
yeah?
guy. Yeah, so me and
Oh,
him always go back and forth. He's got a group in Denver. I mean, when I talk to Isaac, he's got access to like every crypto exchange. He can do whatever. He's not in crypto, which I hate that
That's
he's not.
funny.
I've been trying to get him into it,
he's another
but
guy we went to high school with. So
yeah, another high
Oh,
school.
wow.
please, please, let's invite. Of course, I want to catch up with Isaac, but I also want to know. I want the community to become a place where just what just happened right now. You
Mhm.
had never met Cecilia. You just gave Cecilia a tip. She knows how to take advantage of that tip. Hopefully, she makes money from it. That's
Yeah,
my goal. Like, I want to bring a network together and people make money off learning from each other. That's the ultimate goal. And then
yeah,
again, another thing, because me and Omar come from art, we're art kids. I
right.
also want to create another thing that we start taking advantage of these new AI tools to create
Hmm.
I'm not sure if you're creative at heart, but I think most people are.
I think they
I think,
are.
I think
Yeah.
now,
I went to Fashion Institute,
oh,
so yeah.
Yeah,
Fashion
yeah.
Institute. Oh shit,
That's
yeah,
what she
I
yeah,
said.
went
Yeah,
yeah.
to
yeah.
FIT, so yeah.
So these tools are fucking amazing. I think
It's amazing. It
we're
is.
in the position to do anything creatively we ever wanted to. So I'm starting to like partner with storytelling people who teach how to write stories. Of course, now you have the video, the image generation. I also want to lean back into that side of my life. So I'm gonna try to make space for that now too. Um, Even if it is just making ads for Stack for now,
Hmm.
but
Mhm.
eventually making my own stories as well. So that's my goal here. One, to keep doing this where we talk about anything that makes sense for the community, help the community, and then some stock kind of market world stuff, and then some creative stuff. I'm gonna figure out how to like keep that kind of stuff going. And glad you guys both made it today.
Yep.
Yeah,
Perfect
yeah, glad.
connection.
Cool.
And I'll keep doing these on Monday and I'll figure out what extra days I can add.
All right.
That sounds
Yeah.
good. All right. And Omar, it was really nice to meet you.
Same here,
Miguel, to
Celia.
catch
Nice
up
meeting
with
you.
you. On the 4th, we get together and talk about the movements.
All
Yeah,
right.
for
Awesome, awesome,
sure.
awesome. Have a good day, good week. All right.
Take
Take care,
care.
guys.
Later.
Bye bye.